Bitcoin had an aggressive sell-off on Sunday night, as we know, and is still currently trading around 113,000. Of course, that means that some people think it's all over. We're going to 10,000, Mike McGlone. And others think that this is just a reload for the continuation of a massive bull run. There are a lot of signals that a mega bounce could be around the corner. We're going to unpack that and all of the institutional news right now with, of course, my co-hosts, Andrew and Tillman. But way more excitingly than those oversized bald men is that we have James Seyffert here from Bloomberg, and everybody loves when James Seyffert is here from Bloomberg. Let's go.
Let's go.
Good morning, everybody. Welcome to the bloodbath. And by bloodbath, I mean crypto went down a little bit, and apparently we're in a bear market. But gold now about to trade at $3,800, making new all-time high after new all-time high, which is obviously scaring the hell out of a lot of people. I know, James, it's like Bloomberg's official policy, according to McGlone, to be gold bugs. So has that gotten to, is that memo hit your desk yet? I know you guys aren't allowed to like Bitcoin, and you're allowed to love gold.
Yeah. So, basically, gold is, I think there's more people who are both like against gold in a portfolio and Bitcoin in a portfolio than there are people who are gold bugs and anti-Bitcoin. I feel like those people are a little more rare. They're becoming more and more rare nowadays.
I think that's true. So listen, since we have you here today, I'm not going to dig into everything else first. Let's talk about the big news that's happening in the ETF world. Obviously, we unpacked some of this last week, but not with you. We have first, SEC approves generic listing standards for commodity-based trust shares. And I would say maybe equally, but less hyped news was the Grayscale ETF with multiple cryptocurrencies. Obviously, this is our first effectively index fund for crypto in an ETF wrapper, which, I mean, I just think this is just massive because this is how people invest, right? But maybe you can kind of give us the status on where we're at with ETFs now. When is the Come Rocket ETF coming? Because obviously now anything can have an ETF, and we need that.
Yeah, I mean, all this does is strips out a lot of the roadblocks and time that it takes to bring one of these ETFs to market. You're not going to get some of the more esoteric meme coins, but there are two meme coins that fit the criteria for those generic listing standards, right? So they're Dogecoin and SHIB right now. So theoretically, you could file an ETF and within the next few months get a SHIB ETF. They're already Dogecoin ETFs filed, and they already meet the criteria. So they could launch within the next like month or two potentially. So yeah, basically all this is, if you look back to 2019-ish time range, the SEC spent 5+ years going through this thing known as the ETF Rule 6C11. And basically what it did was came up with generic listing standards for 1940 Act ETFs and basically streamlines the process so you don't have to go through that 19B4 process, which is like that long 260 day delay, deny, approve, back and forth, refile, issue these 60-page documents like why you denied or approved them. And it's a lot of work, and you had to do it for every fund and every new asset. And it was just, they didn't want to do that for all of ETFs, but they never did it for these commodity-based shares. And that's what this is. It's basically streamlining that. And that difference is why futures products, when they filed, were able to launch basically 75 days after filing, as long as the SEC didn't stop them. And why Rex Osprey like force some of these assets directly into 1940 Act products, because they were leaning on that rule from 2019, which like said they don't have to go through this 19B4 process, and they use regulatory and legal workarounds to do that. So yeah, I mean, like this is just streamlining everything, and we're going to get well over 100 ETFs probably that are going to be involved in the crypto space in the like next 6 to 12 months.
Yeah, whatever brand of coffee James had this morning, I would like a cup.
Dude, I mean, James is always hot fire, Andrew. You obviously haven't been paying attention.
I had no coffee, but I did go for a run that I only finished about 20 minutes before we came on here. So
natural coffee. That's where that glow comes from. Yeah. I mean, listen, you mentioned these kind of, circuitous routes people have been going through to get ETFs with XRP and Doge. I would imagine that lights a fire under the ass of the SEC in general to get these generic rules out so they can just, get these going. We had this news that 21 shares launches Dogecoin ETF on DTCC. So obviously, I'm a huge Doge fan. I wear my oven mitt every time we talk about it. But what does it mean to be launched on DTCC but not yet publicly available? Can you explain that?
You want the honest truth?
Yeah,
it means nothing really, as far as I'm like you could file right now and probably get it your some ETF on DTCC if you've gone through the process. That said, like a Dogecoin ETF under this new generic listing standards, under the traditional, I'll call them pure spot. Like that's the way I think about the products that we're talking about here. They're like the iShares and everything other Bitcoin and Ethereum ETFs that have come out over the last year and a half, right? They're pure spot. These other ones that have come out, they are mostly spot, but a lot of their exposure is like through Cayman subsidiaries, or they're holding ETFs held overseas. So there's some inefficiencies there. There's some like fee drag and a little bit, but it's giving you the spot exposure. You're just going to underperform slightly. These are going to be a little more pure, and they're coming.
Isn't the question here, Andrew Tillman? I mean, Andrew, like now, isn't it not about how you get an ETF approved, but how you get futures approved on Coinbase?
Right. So
you know, you get ETF now. You lobby Coinbase to get your token approved for futures. There's only 12 to 15 right now.
So the SEC is just
gas
playing
on the list. I was dying.
Yeah, the SEC is just playing catch up with innovation. You know, they're playing catch up with their own regulatory sort of framework with where innovation is going. So we're going to find ourselves in the next 3 to 5 years where everything's happening all the time. Nothing really shuts off. And so you've got to have a regulatory environment where you can, get a product approved. There's framework where you can get a product approved very, very quickly. So it then can get inserted into that type of environment. So, as James just mentioned in his, initial comments, we had this process where you got 60 days and 40 days, 60 and then 90 and 60, and you're going back and forth. And, that just sounded like a good idea to have just more lawyers and they get paid more. It wasn't a framework that worked. Even for current markets, it didn't work. So catching up to innovation and where we're headed with stuff is a good thing for the SEC. The SEC is trying to be a part of that innovation as opposed to slowing it down or being a roadblock or being a bystander, right? Because it's going to move in meaningful ways. To your point about Coinbase and futures or whatever Coinbase does or whatever Robinhood does in any given week, that's going to press and press and press innovation. It's going to press regulators. It's going to press players in the market. And it's not going to slow down. It's certainly not going to slow down in the next 3 years. They're going to press and get as much done as they possibly can from an innovation standpoint. And then we'll see where we're at in 2028, let's call it.
Well, my take is finally the markets are able to respond to demand. I think we've seen this demand pinned up for a long time. And diversification is obviously a tool that everybody's familiar with and everybody uses. And the more products you have available to you to diversify against, the easier investing becomes, or the more mindless it becomes, because you're going to be able to create indexes against everything. Just bet on the entire industry going up. And, that I would say that's a pretty safe bet instead of trying to pick and choose between the various projects. There's a lot of technical know-how that needs to be had in order to evaluate a crypto project on its own merits. And I think this is a good thing. I think it's going to help, people who don't have the sophistication inside the crypto world to place real money, like big money, against this industry. And I think that's a good bet. But I just think it goes back to what, everybody's been kind of focused on this year, which is productizing crypto and productizing it in a way that is fully integrated into the TradFi side of things, because that's where the customers are demanding the intersect to happen. The customers want ease of access. They want loans against their crypto. They want to feel like they're a part of the banking community and have access to all the familiar services that go along with that. And I think this is just a natural evolution of the markets, and excited to see it.
Yeah, what we need is 2x leverage short SHIB ETFs, which are inevitably
They'll be here, but I believe.
No, I know they will.
I think they will be here.
Well,
I mean,
I think the great thing about crypto, though, that's almost teaching TradFi something is how sticky an investment can be. I mean, think about what we're talking about here. Like SHIB is going to be a Wall Street product. Well, SHIB is nothing more than a community. It's a community of people that are proud to be SHIB holders. And that's something that I don't know if the TradFi markets have seen in a while. I think back in the heyday when, Coca-Cola was at I think now it's just this money grab chase. And I think that, that demand is very clear and evident that there's a lot of tribalism inside crypto. And when you do have enough technical knowledge to make your assessment as to whether you're a believer in the project or not, it's almost like, the orange pill or the blue pill, red pill type scenario. There's no going back after that. You kind of have, sold into the project.
Yeah, quickly before you guys jump in, there's actually two kind of pieces of breaking news that are hitting right now that are relevant to our conversation. One, Justin, Visa, Stripe, and Fold partner to launch Bitcoin credit card. This seems to be the new trend. Gemini and Coinbase's card, but this is pretty big. And then this one in this conversation, SEC to allow crypto companies to launch products in the US without burdensome regulatory requirements. Gary Gensler's loving that. I mean, just deep in his heart. I mean, okay, to skip those, James, going back to the other conversation before we get to any of that, and you can comment on that. Is there an element here where the SEC is sort of playing kingmaker with Coinbase? Like, why? I mean, I know that it's just because they happen to fit the requirements. Maybe the better question is there an angle now where the Robinhoods and Geminis and everybody else in Kraken try to get on that list that Coinbase is already on so that they can launch these other futures products, which will then count and be ETF'd?
Yeah. So the way I see this is like the SEC is pushing this off of their plate to determine what can get an ETF, essentially. I honestly think they pushed off a little more than they should have. What it comes down to is if you're in one of these surveillance groups, which Coinbase derivatives platform is in, and you have a futures contract for 6 months, like that asset can go through, right? Like that's what you're talking about here, Scott. And
but
that's
is there
kind of
anybody
like
else besides Coinbase right now? Or is that
no,
it?
not in the crypto.
Right.
CME is on there, but obviously CME is a little slower to put these like derivatives contracts on there. Any other platform like that. There are some overseas platforms as well that do this, but Coinbase is the most forward thinking, I guess you would say. But the other part is there's language in this document that like if you are like an actual spot trading platform and you fall under these surveillance like you fit into these surveillance groups, say Coinbase's actual spot crypto trading platform somehow registers and becomes like able to be considered part of that ISG group, the surveillance group, like all of a sudden those things trading on there are eligible for an ETF as well. So I would say like this is just the start of it right now. If we see a bunch of these other platforms having derivatives platforms and even their spot platforms, which I think is going to happen in the coming years, we're going to see a lot more things come out. And basically what it does is right now it's like if the CFTC allows these futures contracts to list and they're okay and they don't do anything to stop it, then that goes through. And then obviously it's up to the issuers to file for these ETFs. So the issuers, they're not going to file things that they just think are not going to work, but they are going to shoot a spaghetti cannon at the wall to see what will stick. So we're going to see a ton of stuff come to market. I actually think as somebody who was like, you were just talking about Gary Gensler there. I mean, if you listen to his interview on CNBC, all the reasons he was like saying he was against this space were like meritorious. Like he didn't think some of these investments had merit. And that is not what the SEC is supposed to do. They're a disclosure regulator. They're supposed to say like, you have to disclose all the risks to your investors. And this is what you can and cannot do. And this is what needs to be in these documents. And his defense, like on CNBC was basically like these investments had no merit. It's like, that's not the SEC's job. So I also think they maybe didn't go far enough here. Like, I think there should be some limits on like, there has to be a certain level of volume. Maybe there should be like some limits on free float. Like you can't be launching these coins with high FTV, low float type things where you're only 20% of it's trading into an ETF wrapper. Like there's openings here for like really sketchy stuff to happen. So I think we could see some added criteria come on down the line. But for now, it's just good because as Tillman said, they're getting out of the way of innovation. They're just kind of letting this stuff go. And ironically enough, the lawyers, like, yeah, they're getting a lot of money to do this, but if I've talked to a lot of lawyers in this ETF space, they do not want to be dealing with those 19B4s over and over and over again. Yeah, they get paid, but like they don't want to do it. And this is going to make it cheaper to launch ETFs. So we're just going to see a spaghetti cannon hit the wall. We're going to see a lot of, excrement hit the fan as well. And the market will decide what has value, and that's what will stick around.
Spaghetti and excrement everywhere.
Yeah.
That's what
Speaking of sketchy stuff,
the top, by the way, the top of the market is the Fartcoin ETF approval. I'm calling it right now. You heard it here first. Clip it.
I was just going to say, speaking of sketchy stuff, I do think SEC has a role here that they could stop a lot of the stuff that we see happening in the markets. No different than the $1.7 billion of longs that got liquidated yesterday or day before. That was an attack. That was there. You can go analyze it for yourself, but the deeper you dig into that movement, there's a reason it happened at 2 a.m. on Sunday night in all foreign spot exchanges. It was a cascade event, and those are the types of things that are like money grabs. They're at $1.7 billion versus 12.74 million in longs taken out. So when the markets are disjointed and there's a layer of liquidity that can be flushed that is $1.7 billion deep, trust me, somebody is targeting that. And the SEC, that's really what their role in the markets is an investigative enforcement agency. And to James's point, they're not really built to assess whether
Weisberger broke that down really well yesterday, obviously, because he sees the price action on coin routes. But he made the point that the SEC and CFTC don't even work together, and you have one side on the spot exchanges being manipulated, and the other side is the futures and leverage. So in the United States, we wouldn't even be set up to have
monitor this
necessarily with that, because you have two disparate regulators that are in charge of the two sides of the market used to manipulate the price there, which is pretty interesting.
Very.
Yeah, regulatory.
You look like you're dying to talk.
Cross-regulatory conversations are just thrilling podcast conversations.
It is. I think we should dive deeper. You want thrilling stuff? I'll give you something thrilling. Here's some red meat. Jim Cramer wants to see a pause in the endless rally of speculation and profitless companies. Who's up?
If that isn't the indicator of the start of the bull market, I don't know what is.
It's time. And speaking of time, we're coming into Uptober. Rally questioned as crypto markets turn red 9 days out, as if 9 days means literally anything. 10 days left until October, where we're going to put another big green one there. And if you take a look, almost everybody who's ever bought Bitcoin right now is in profit. There's like 12 people out there who are like, damn it, I've lost money on an average basis. What do we think of the market here? Do we think that all of that what we're talking about is going to be catalysts, all these ETFs? Where are we at?
Some of us actually remember, previous crypto cycles, right? So previous crypto cycles, go to significant tops, and then they race very, very quickly to 40, 50, 60, 80% retracements. And that's literally just not happening across crypto over the last 6 to 12 months. Not only is Bitcoin not meaningfully retracing, but all of altcoins and the move that they've made over the past 12 months are not in any way, shape, or form meaningfully retracing. Like, Solana has stayed in between, it's called 120, 150, 220, 250, right? That's a big spread, but at the same time, that went down to $8 like 3 or 4 years ago, right? Very, very different price action, because we now have a floor associated with the world that James lives in, which is every single day there's going to be a new ETF news associated with altcoins or a mix of crypto or a mix of something where there's going to be flows. And by the way, the people that generate those flows, so your wealth management clients at mass affluent, high net worth and ultra high net worth shops, like the Ameriprises all the way to the Morgan Stanleys and the Goldman Sachs, they buy that stuff and they never sell it. They never get out of it, right? They buy low and sell when they die, not buy low and sell high. So that floor will keep moving up. So the point being is, cycles have been rearranged for a while. So will Uptober happen? Of course it will. The interesting thing to me has been over the last, let's call it 9 to 12 months, is the floor has completely changed across this asset class, completely changed.
Because of Treasury companies.
So I actually agree with most of what Andrew said. I think like the amplitude of these moves up and down, at least on a percentage basis, maybe not on a dollar weighted basis, is going to go down. Like it just has to happen over time. Like that's what's going to happen. But the other side of it is like I really do see a future where like some of these DATCOs like cough up coins. So no matter what coin they're investing in, something's going to happen where they're going to end up coughing up coins and it's going to contribute to a downturn. I think over the long enough time frame, what Andrew said is correct. Like the institutional world, advisors are buying these things as a set allocation in their portfolio. They're not like rocketing. There is some momentum trading obviously happening in ETFs. There is a retail contingent involved in buying these ETFs. But a lot of the people that I talk to, institutions, RIAs, they're thinking about this as a set allocation and they rebalance on a semi-annual or annual basis. And if like it goes above that allocation, they might sell a little, or maybe they'll increase their allocation. Or if it goes down, they're going to buy. So like it's this like there's like as Andrew said, there's this kind of this now like set floor from billions of dollars in the TradFi world that is buying into the space, at least with Bitcoin, to a lesser extent Ethereum. And you mentioned this in there earlier. We didn't really even talk about it, Scott. GDLC getting approved, multi-asset index ETF. I think one that's massive that just goes in line with the generic listing standards. BitW from Bitwise is going to come shortly after.
Remember
Franklin has a product.
Rejected?
Yeah.
Paused indefinitely.
Yeah, stayed. They'll come out. I think that category is likely to be the third biggest category. We can get Solana and XRP, which will be huge initially, but I think these index basket products are going to be the biggest product for at least the near future after Bitcoin and ETH, just because they have such a long head start. But if they had launched all at the same time, these basket products, as you mentioned, that's how people invest. That's how these RIAs tend to invest. They want beta to this market. Like these basket products that say, all right, I'm going to give you the top 10 coins X Bitcoin. And people are going to like, all right, I'm going to put a little in Bitcoin. I'm going to put a little in this beta. Yeah. And they'll figure it out. And like, or they'll just, I don't know anything about this. I'm going to put 4% in this index fund that is 80% Bitcoin and 17% Ethereum, you know, and that's how this is going to play out. That's where most of the assets are likely.
James, quickly, I had Kyle Samani on, obviously, from Multicoin and Forward Industries, the huge Solana company that just launched. I had him on Sunday, and he said with pretty high conviction, Solana ETFs with staking will be launched by October 1st.
I mean, we already have one. Rex Osprey's SSK has staking exposure.
That's in 8 days. That's in 8 days.
So yeah.
That's why I'm asking James, because he knows things.
I haven't heard anything moving that quickly, but honestly, it wouldn't surprise me. It wouldn't shock me. I would probably take, if I had to bet on it, depending on the odds, I'd probably take the over. But I'd be shocked if we don't see them launch in October. The part of the problem that I have caveats on is the SEC is ready to approve staking in Ethereum ETFs. That when Solana ETFs launch, they are going to launch with staking. The only concern is like part of that approval is like these are grantor trusts. It's a specialized structure. They're not allowed to have income. So that's why they hold gold or silver or Bitcoin typically. The question is with Ethereum and Solana and some of these other coins is like, does staking yield count as income? The question isn't what the SEC thinks. It's more about the IRS's view. And I haven't heard any public IRS comment. So I think we could get to a situation, in my view, where the SEC says, I'm fine with this, but the IRS hasn't given a comment on whether or not this is allowed in like the tax code or what have you. So like that is the only area where I still have some questions in the back of my mind. I'm like, is this ready to go? Other than that, I'd be shocked if we don't see these things launch in October.
Do we still have an IRS? I thought that they got
rid of it. Does anybody remember the videos that Gensler made about stake versus staking?
Oh yes, they were very cute.
Those were.
Yeah.
Remember those?
Yeah, those were really good videos. But with staking ETFs, doesn't this take a bit of the shine off of the altcoin treasury companies? I mean, his view is that it's very good, but like, you know, if you can go buy an ETF and you get the 9% boost from the staking, you know, doesn't that kind of discourage you from paying a premium for a treasury company that's doing the same thing?
Well, there's more aggressive ways than just staking, right?
Yeah.
The DeFi ecosystem allows you to press the pace as much as you want to.
It's just a much smaller gap, you know.
Yeah. So you just, if that flavor of ice cream fits your, desires, then go for the ETF. It's much easier. It's a much more convenient way to get that exposure. But if you do it yourself, you can dial it into whatever you want, and you can press it in ways that you can't through an ETF.
Yeah, to me, the treasury company stuff is just a pivot and almost a bid associated with, all right, there's nothing cool and fun. Meme coins nobody's doing that anymore. So let me take a flyer. The kind of investors involved there. Let me take a flyer on this Solana, treasury company. See what happens. Maybe their price moves 3x and I make some money. There's a significant difference between a Bitcoin or Ethereum ETF investor and a Solana, DAT investor. Those are very, very, very different people.
It's true. Speculator versus passive investor.
Correct. Very, very, very different audiences.
I like steel manning the arguments here because like I see the argument on both sides here, right? So for an ETF, you're getting pure beta exposure to the asset with staking yield. Now, are they going to be able to stake 100% of the assets? That remains to be seen, liquid staking tokens, but there's concerns about being able to take money out of the staking queue, particularly with Ethereum. ETFs, they have redemptions on a daily basis. You need to be able to meet those redemptions. There are other assets, bank loan ETFs, for example, that they have lines of credit, basically because they take so long to settle bank loans that they can tap on that credit until the settlement actually happens. So there are ways around this. There are ways you can structure this, but you're just basically paying a fee to get beta exposure. If you want exposure to basically a closed-end fund, the way I think about it, almost like a bank that's diving into these spaces, doing true DeFi, and you think they can, outperform the underlying yield of the beta market, you're investing in active management. And honestly, we've seen with Saylor, he's actually been able to grow the actual Bitcoin per share over time. And so far, over the last few years, it's been a valuable way to invest, right? Like he's actually been able to do the things he's been saying. So if Samani, Tom Lee, or any of these other guys are actually able, even if you're paying a premium to get exposure, and they're able to grow, that end Ethereum or Solana per share faster than you would be able to get it in just a beta exposure.
Yeah,
that's the bet you're making when you're buying one of those things.
So quickly before you guys jump in, I know James, you got to go. So anything else we might have missed that's on your radar? Any final thoughts?
No, like I said, we're going to see literally like hundreds in the next 12 to 18 months of crypto related products come to market. They're going to be covered call products that generate income on Dogecoin and Bonk. And like, we're going to see levered products on both sides. We're going to see active basket portfolios probably that are like picking different coins and weighting them however they want, the way you would think an active mutual fund manager. I mean, all this is going to happen in the next 12 to 18 months. I think there's also going to be like 18 to 24 months from now, a lot of liquidations. So like I said, people are going to throw shit at the wall and we'll see what sticks and the market will decide what has value. And the final thing I'll reiterate is I think there probably needs to be some additional rules, maybe around volume or float or FDV, any of those things that besides what's like, if you have a futures contract for 6 months on this platform, you can launch an ETF. I'm all for libertarian ideals. I just don't want people taking advantage as exit liquidity with some of these high float, low FDV coins. So yeah, that's my view in the space. This is extremely positive. Things are heading in the right direction. We're in a completely different world from when Gensler was here, and everyone's saying the SEC isn't moving fast enough, has no idea how slow a government agency can be. This is they're moving at lightning pace.
This is lightning pace even for a non-government agency. James, man, as always, thank you so much for joining. Appreciate it. Everybody give him a follow. Jay Safe, right? On
Jay Safe on Twitter. Thanks, guys. This was fun. Have a good rest of your day.
Appreciate it, man. Yeah. Have a good one.
You too, James.
He's gonna go run some more.
Yeah. Just a reminder. I feel guilty after
you didn't run. That. Yeah, but for you, it's like 6:30 in the morning, man.
It is early. Yeah.
So unless people forget, like speculation, ETFs, all kinds of weird stuff coming to market. The most heavily traded ETF last year was like a 2x long NVIDIA ETF, right? It was a leveraged product that, you had to go figure out and find, and people figured it out and found it and traded the heck out of it, right? So, whether it's speculation or not speculation, I mean, for all intents and purposes, that's what most of the market is anyways. And so, the crypto is going to add additional alpha, additional trading volumes, additional everything to the current traditional system. And banks and brokerages and everybody in between is going to be all about it. Makes everybody more money.
Well, it gives you the ability. It's like having a new ingredient to work with as a chef. It gives you a much broader menu, right? You can produce things that you otherwise couldn't produce for your customer base. And James said something I think is exceptionally important to take note of. At this point, with these products that are launching, you're making as much of a bet on management as you are on anything. And I think a lot of people get lost in the whole, like, I'm just investing in Bitcoin, and they make excuse. No, well, there's ways to invest in Bitcoin where there is no management exposure. Bitcoin doesn't have management. It does what it does because it's Bitcoin and it's programmatically driven that way. When you're talking about like combining assets and you're talking about debt mechanisms to buy more Bitcoin, and whether you dilute your shareholders or you don't, and all these decisions that go along with treasury companies and and the like, you're talking about people trying to create an advantage, right? And when you have to try to create an advantage, you have to take risks to do so. So there will be a lot of losers along the way. There will be a lot of winners along the way, and we're going to get to see who the brightest minds are, and or who the luckiest people are in the space over the next 10 years, and who gobbles up the market share. But I think that, you know, if you look at really what people are doing, they're injecting Bitcoin and altcoins into every type of model you can imagine. And they're doing it because it provides exceptional upside with relatively low downside if you believe this is the next revolution as it pertains to finance. So I think, you know, this is just the beginning. This is the tip of the iceberg. Like we've talked about before, I've given this analogy 100 times. It's like we've driven across the Vegas or the, you know, Nevada state line, and we're in the first gas station, and we've never gambled before, and we see these 3 slot machines, and we sit there all day going, aren't these things great, not knowing that Vegas is right down the road that's being built. We're about to see Vegas unveiled over the next 10 years, and there's going to be an infinite number of things. But ultimately, if you're not holding the asset yourself, you're trusting management and their ability to multiply that at a greater, you know, MNAV than just holding the asset, or a greater than MNAV than 1. So it's going to be interesting.
There's going to be, you know, DATs, digital asset treasury companies. How long did it take somebody to come up with that acronym? There's going to be 10 to 15% of those that survive, right? They'll go through a proverbial cycle. They'll survive, but those that do survive will be meaningful. I always hearken back to what happened during the, you know, the internet.com bubble and then burst. And oftentimes I talk about Priceline because I remember Priceline at like $1.92. The reason why I remember Priceline is because I was a broker back then, and I had customers in it. And there were mornings where I would wake up and it was down like 37%, and I was sweating on my way into the office. Right? I hadn't looked it up in a while. You know, Priceline, you know, changed its name to Booking.com. I had a few times on this show said, well, you know, it's $1.92. Now it's $2,000. Booking.com is $5,000 a share right now. $5,000, right?
Real?
Yes, $5,000 a share. So also, I'm reminded that there was a time, I don't know how long ago it was, maybe 15 years ago, where private equity companies actually went public. And at the time, basically, the overall theme was, well, why are they doing this? What value do they really add? The share prices didn't move in any meaningful way. BlackRock went public, KKR went public, blah, blah. I looked those up too. All of those have just completely skyrocketed beyond anything that I remember. Point being is that whenever there's a new category, that new category will go through a version of a washing machine, and some of it will be like paper in your jeans, and it will just literally dissolve. And then there'll be some jeans that actually come out of that cycle, and you'll be able to wear them. They will make it through a wash cycle.
We
so
got
there's
the
10 to
jeans
15
in the paper. We got the jeans in the paper, the Vegas gas station.
The analogy
James had excrement hitting a fan, then shit hitting a wall, and a spaghetti machine apparently that throws spaghetti at walls, which I need.
Yeah.
And
he used the word amplitude, which I didn't think was real. I Googled it. It is. So that's
amplitude. Well, I'm fact checking you on Booking Holdings Inc. And you're right. It's $5,400 a share.
That's insane. All you do on that website is just say, "Hey, I'd like."
Yeah, but I want you to think about it, everything that pulls that type of value is a network that connects people and or collects a lot of data. And that, you know, that qualifies, if anything does. I mean, they've collected a hell of a lot of data over the years.
Still
Yeah.
wild
So,
though.
you know, the digital asset treasury movement, you know, will somehow survive. Again, the Tom Lees of the world, the Sailors of the world, you know, and a few others. You know, the guy Soleimani or whatever his name is that you had on for WorldCoin.
I think you just called him like the Iranian Ayatollah or something, but okay.
Yeah. And
Samani, which
yeah, Samani. Okay, there we
affectionately
go.
called salami, but I've never
I
heard him
threw
called
I threw an
Salamani.
L in there. I threw an L in there on Samani. But you know, there will be survivors, and they'll do exceptionally well. We'll look back at them and say, "Holy cow! You know, you could have bought it for $7, and now it's at $1,100, right?"
Nakamoto is trading at $1.25 right now.
$1.25
might even be a
right?
slight discount to their net. Man.
So the question then becomes, you know, are you a believer in, you know, a Tom Lee type of management structure, or that guy, or whoever is running the ship at Nakamoto? That's the question you got to ask yourself, right? Who's going to survive there? You know what I mean?
I don't think it's as simple as that. I think it's one of those things where you say, you know, I've heard this a lot. It's like easy to become relevant, harder to stay relevant, right?
Yeah, man.
Yeah, it's like yeah, you just have to hit one ball, one home run to become relevant. To become, you stay relevant, you got to keep hitting home runs. And you know, I think launching a treasury company has a lot of sizzle to it, and you see these huge moves. I mean, look at Gemini's launch. I mean, I was very anxious to see what would happen with their IPO because they put their financials out a couple of weeks or a month before, and they were losing money. And so I wanted to see, like, do you trade at a positive MNAV when you're losing money, or like where does it fall? And it's just interesting to see that there's a lot of money that wants to speculate at the very beginning of things. And you see these huge pumps, and then everybody that's like becoming relevant, like Trump coin. It was relevant for 36, 48 hours. And then it became not relevant. And when it does, when you lose that, staying relevant, there's an exit that's just really brutal.
The attention economy right now that has been, fertilized on TikTok and Instagram and Facebook and Twitter, where everything gets your attention for 30 seconds before you move on, literally world tragedies and everything, has fully been gamified in the stock market.
Yeah.
It's such a smart point. You see every one of these Christmas tree kind of charts where you get the massive pump and then the absolute dump, because everybody gets financial advice from the internet or from a friend. They do no research. They buy the thing somebody tells them to buy. 30 seconds later on their phone, immediately it's the top, and they don't know when to sell it and ride it all the way to the bottom.
And the only way you cut through that, both short-term and long-term, is innovation. You've got to have some version of innovation. You have to keep innovating, right?
Yeah.
You certainly have to keep talking about the innovation that you're doing, but you have to innovate. Like you absolutely have to do it. NVIDIA could have stopped however many chips ago, and they'd still survive and be awesome. Cough, cough, Cisco. But they keep innovating. They keep every quarter. There's a new innovation that people need and want to get their hands on. It's been that way for several years now. It's a reason why. It turned them again. I've made this point several times on this show. There's a lot of people that sold when NVIDIA went from 100 billion to $1 trillion company, right? That was a dumb move, because now it's, I don't know, anywhere between 3.5 and $4 trillion company. So you almost 4x your money from that point. So yeah, innovation is truly what drives sustainability.
You're talking about Arch Public, right? You were talking about Arch Public.
Of course.
One more thing on David Bailey and Nakamoto. I wouldn't personally bet against a guy becoming relevant again who got Donald Trump to come speak at his conference.
True.
Listen, you can go dormant after your initial home run for a long time.
He's got a lot of home runs,
And there's going to be another home run down the road. Yep, that's exactly right.
Listen, for me, like final words on Nakamoto, I was very critical. Obviously, I wrote a whole newsletter on, like, I think one of my lines was like, right after it dumped, was like, with all the rumors spreading, buying this is just lighting money on fire, maybe. And then I bought it 2 days later. No, because I heard what they had to say and I read his threads and all, and he did a great job at addressing the rumors. I thought about all the things that you just said. And I decided, well, if this thing is trading at NAV or below, has massive people that I believe in behind it, then this is as good a place to throw some money into this market as possible. I'm not saying I was right or wrong. I think criticism is fair. I think they were victims of a terrible, like, structure. You know, they launched kind of first, and then they had to wait from May to August until they could actually buy any Bitcoin, and then they had to wait a couple more weeks before the shares registered. You know, you get ahead over your skis or you try something first, there's going to be unintended pitfalls, I think, that come for you. But let's talk about not that. Let's talk about Arch Public, and let's talk about Future Fund One, because these are the things right now. This is all we actually care about. We just talked about all this other stuff for you guys.
Speaking of innovation, I mean, again, whether it's adding exchanges, adding symbols, you know, the Gemini, Kraken, Coinbase, and Robinhood now at this point. We've got a couple more of those coming on the way here over the next 30 to 60 days. Additional products, we're a couple weeks away from adding an entirely new product line that people are going to engage in. Our concierge program folks are going to get their hands on first. Innovation is the name of the game at Arch Public. There's no reason to stop doing it and give people an opportunity to engage in just a massive, massive growing warehouse of strategies and products and opportunity for them to use and just be blown away at the scale of what it is that we do at Arch Public. So
it's the genes, it's not the paper.
That's correct. That is
user-driven automation, if you've never experienced it before, is something that really pulls back the curtain and exposes you to a world that you have always heard about. High frequency traders or systematic trading. All these things are integrated into TradFi and have been for a long time, and they actually rule the market. 70+% of the volume every day is automatic. So you look at the crypto space, you look how fragmented it is, you look how disjointed it is. In a lot of cases, you look how cumbersome it is to navigate. And then you try to multiply that times 100 entries that you're trying to make into a position. And the headache becomes a hill that most people are unwilling to climb. And so Arch Public is about creating tools that make that hill less steep, make it easier to climb, and to give you exposure to things that allow you to take what your preferences are as a user, put those preferences to work inside of an algorithm that will then execute against your preferences, and set it and forget it. And leave it. And then you're not having to be a slave to your phone and watching the markets and trying to time the markets and the emotional swings that go along with that. You have a systematic robot that's sitting there based upon what you've prescribed it to do, acting on your behalf. And for anybody who hasn't heard us talk about this before, we built this as an effort to solve problems that we were frustrated that weren't being solved in the space. And one of those big glaring problems were I wanted to use automation without trusting somebody else holding my money, trading it for me. Well, our system is completely user-based. You can use it for free. You don't have to call us if you don't want to. You can sign up and load it up, read the instruction manual, and get trading very, very quickly. Your money stays on your exchange. We are now integrated with Gemini, Kraken, Robinhood, Coinbase. We have a lot of integrations. So pick which one you want. If you already have an account there, pick that one because it'll get you.
I'm waiting for Robinhood. It takes a long time to transfer money into Robinhood, by the way.
Did it?
Yeah,
Yeah.
I'm still waiting for it to hit. It's like 4 or 5
Right.
days. I think maybe because I'm new, but yeah, I'm gonna be running a multiple six-figure portfolio publicly on the show every single week on Robinhood, running the algorithms to compound Bitcoin. So like, I'm just gonna put this out there, guys. Don't fuck this up, because like if we do this and I lose all my bit, no, I'm just kidding. It's gonna be great. We know, I've seen it, I've back tested it. We're going to just do it with my actual money very publicly, so that we don't have to explain it as much anymore.
Well, given the amount of price action just over the last 48 hours, we nearly have to create an entire show to go through all of your trades. I mean, again, if you've got Solana and SUI set up and on the arbitrage side, and you've got 3 or 4 intelligent accumulation stuff happening on Bitcoin and Ethereum, you're talking about 12 to 14 trades inside of 48 hours just because of the price action. And again, it all happening, at 3 a.m. when you're sleeping, or you should be sleeping.
Sunday must have been fun for the algorithm. That wasn't
exactly right. Exactly.
Well, but a lot of people hear over and over again, volatility is a feature, not a liability of the markets. But when you ask the retail space, how are you harvesting volatility in this market? Nobody has an answer, and including us before we built these tools. Now you have a tool set that allows you to go, if Bitcoin drops by X%, buy this much Bitcoin. Well, why would you want to prescribe that? Well, you're buying on dips. That's literally the objective. So if you spread your capital out across a long period of time and you're buying on the dips, you're dollar cost averaging on all the low points across that time period.
And you can also set it to like, if you make a certain amount and it goes back up a certain amount, sell a slight portion of that to cover the trade, plus keep more Bitcoin, plus make it yield. And you can do it on Solana and other assets, which have a lot, and SUI, which have a lot more volatility, and compound that into Bitcoin. Guys, like I said, I'm just going to show it. We're going to talk about it every week, exactly what's happening. There will be some weeks where we're down. There will be some weeks when we're up, but it's important to remember, my goal isn't for the portfolio to necessarily be up. It's for me to efficiently add as much Bitcoin as possible with the money that I assign. So if it goes into a bear market, I will have more Bitcoin, but yes,
correct.
The dollar amount might be down, but that's not my goal. I'm not doing this to trade into dollar profit. I'm doing this to dollar cost average better into Bitcoin and farm the volatility on other tokens to do it.
You just said exactly what the key point is. If your objective is to rebalance constantly between cash and positions, there's no better tool set that I've ever seen than what we have to do that. And so if you're in 0% crypto and you want exposure, there's a certain protocol and number of protocols that we can help set up for you, and you can set up for yourself, that will accumulate into a position. If you want to take a position, you want to harvest volatility, there's a whole nother setup that you can do in multiple setups and layers upon layers of instances and tradable events that you can engineer for yourself to harvest the volatility according to what your preferences are and what your objectives are. It's incredibly flexible, and once you start playing with it and once you start using it, one thing I will note, you can't, if your objective is to accumulate more of the asset that you're trying to accumulate, Bitcoin, or if you're trying to play the volatility, there is no losing. You're going to buy more Bitcoin. If Bitcoin's volatility happens, you're going to sell. Now you get to prescribe, am I buying $500 of Bitcoin and selling 500, or am I buying $500 and selling 100? And what kind of a bull bias? How much am I taking off the table versus how much am I leaving on for long-term appreciation potential? So incredibly flexible, and it allows you to dial in exactly what you want to do based upon what cycle we're in and what period of the cycle we're in.
Something else that needs to be said is because TradFi markets are nearly 80% run by algorithms at this point. That's not the case in crypto. Nowhere, you can make the case that maybe it's 10%. We're nowhere near that number. So if you're a retail person using these tools, you are miles ahead of people that are not using these tools. You're effectively Jim Simons and Renaissance Tech in 1979.
Did you guys ever see the video where Marshawn Lynch plays football with a bunch of high school kids?
Yes.
exactly right.
You're Marshawn Lynch
Exactly
as a
right.
running back against a bunch of high school.
In 8th grade.
Now, over the next 5 to 7 years, crypto will get there in terms of programmatic, algorithmically, running stuff. But you are miles ahead of everybody else if you're using these tools. So that's another thing to consider. If you want to front run algorithmic trading across crypto, you have the ability to do it here. And by the way, really nowhere else.
Or if you're the prudent person that doesn't want to enter crypto because we're quoted all-time highs, you can set and forget strategies that will buy at the generational lows. Like it will wait for the bottom of the bear market. So you can use it literally for the entire spectrum of what an investor would like to accomplish. And it becomes a very personal thing. Our team is exceptional in helping you through it. I saw the comment pop up. Luca is one of our employees over at Arch Public. Every one of our employees, I think to date, maybe a couple aren't, but they're all ex-customers. They're customers that fell in love with the product and know it so well that they are now passionate about helping other people learn it and know it as well as they do. So if you have interest, here is the way we've set this up. It's completely free to use. There's no watered down version. It's the full robust version of our software. You can go on our website, download it. You can set it up and you can use it absolutely to your heart's content, absolutely free. There is a maximum tradable amount through the free version of $10,000 per year. So if you're under that, don't think about anything else. Go use it because it's going to be an exceptionally eye-opening event for you. If you have more capital that you want to trade and you reach that limit, call us and talk to us about the concierge program. That's how we can put you in a specific area that allows more capital to be traded, and it gives you essentially hands-on help with setting those up and learning about the software. And that's become really our staple. Like we get more praise from our customers about our customer service and how we're engaged. Yeah.
Shouldn't we make a video of me getting this set up with your people so that we have a video
That'd be
that shows the process? Like, shouldn't we just, I mean, part of it can be me just waiting. The beginning of the video can be me waiting for money to hit Robinhood, just waiting. But like, couldn't we just turn it into so people can see what this process is like? And we would just have like little clips of, hey, this is like getting it set up on TradingView. This is how we set the parameters. Because if you guys want to go with the parameters that Arch Public views. So I'm going to allow Arch Public to basically run this in the way that you guys would think is ideal based on my needs, right?
Well, you're going to run it based upon what the historical performance.
Correct.
So here's the truth, guys. When you do a historical analysis of previous price action and what a strategy would have done over a period of time, there is no correlation to the future unless things continue to remain the same. And so that is what you're essentially looking at there. But what it does help you do is it helps you get started. And then once you get those default settings in there, it's very simple to change those, because everybody has a unique capital need. Like Scott, you're a unique purchasing power compared to other customers, so you're going to need to appropriate that the way that you want to appropriate it. Let's do a video and we'll definitely kind of highlight the onboarding process and what it looks like.
I think the video with you, Scott, will add amplitude to
I just think that what we've attempted. This whole show started with a equity trading portfolio, which is still, by the way, massively up. We just stopped updating it. But I think that the key here is just as much transparency as possible, which is why I wanted to wait, because like my very close friend is a top guy now at Robinhood. I just wanted to do it with Robinhood, right? And so obviously we could have done this with all the others. But now that we have the green light to do that, like, let's just run it. Have fun. Like, guys, you'll see if it's reaching my goals. We're going to be honest. Can't be able to hide it. But also, if we can just kind of go through this process that we talk about every week and show people what that process is like, right? I think it'll better the process and product, but also make people a lot more comfortable. But guys, it's 100% my own money. There's no I'm going to put a large amount of money into this, and we're going to run it indefinitely.
Yeah.
Love it. Well, we will be right there along the way to help you and set you up, and we can film it and all that good stuff. That's great.
Hey, I know it's 9:58, and that means we're probably supposed to go, but we need to also talk about this.
Yeah, we're exceptionally excited about the response that we've gotten so far on the Future Fund One. There's a lot of ways to try to tackle incorporating Bitcoin into, what I would call traditional businesses. And real estate and real estate funds, I think, are such a beautiful fit that we have launched our own fund. If you're accredited and you are an accredited investor, please reach out to us. You can go to Future Fund, this website right here, and you can enter your information, and we'll send you a deck, and we'll have a conversation with you and explain to you what we're doing. But very briefly, the function of this fund is to acquire real estate that produces cash flow from both operational cash flow, but also if the fund is the landlord and is collecting rent rolls from that property. That cash flow is being deployed into Bitcoin. And so we are going to essentially be a Bitcoin accumulation fund on the back of tax advantaged real estate that produces cash. And that's the model, and that's kind of what we consider to be, in our opinion, the most prudent way to scale capital into a Bitcoin position, because you have a natural dollar cost average mechanism built in the fact that a lot of the companies, if not all of them, are a 50% contribution to net operating income. So if you have 50% of a business's income coming into the fund, and we're acquiring it every month or every quarter in the fund, you're getting exposure over long periods of time to the Bitcoin curve. And you're not borrowing money to make those purchases, so you have no liquidation pressure. There is no point whereby which your model is bust. So it's a way, in our opinion, to add a ton of upside to what a lot of people would consider to be kind of boring cash flow real estate properties, and juice that model with tremendous Bitcoin advantage, but at the same time hedge against that with the tried and true tax benefits of the big beautiful bill and the real estate component of the fund. And what it does is it allows us to take some of the refinance opportunities inside of the properties that we own and repurpose that cash into high growth companies that will contribute more and more net operating income into the Bitcoin treasury. And a lot of companies that are high growth have a hard time raising debt capital to achieve the growth potential that they're able to achieve. One of our partners in the fund is a good example of that. They're one of the fastest growing franchises in America. They print cash in pretty much every store that they've opened. And it's one of those things is like the individual franchisees only have so much borrowing capacity to go expand into their territory. Well, our fund is something that is targeting those unique opportunities for expansion capital, but also have a great cash yield that we're able to secure with that investment. And that cash yield is what we're interested in multiplying and compounding and putting into Bitcoin, so that our Bitcoin treasury continues to compound and multiply. So that's short as I can make it. Call us if you're an accredited investor, and we can talk.
As short as I can make it.
Yeah, super. That was pretty good.
Oh, it's pretty good.
I feel like I need an oxygen mask now. I didn't take a breath there.
Yeah, that was good. And I'm going to put a bunch of money in this too, so you guys can watch that go.
Sweet.
Well, listen, tax advantage funds are, I mean, if you're familiar with them, they're just kind of a no-brainer. If you have a big tax liability, the government has incentivized you to make investments in certain properties, real estate, equipment, those types of things. And so if you can invest in a fund whereby which you have a tax liability, there's a tremendous 80% accelerated depreciation in the first year. So that's just, it has a lot of benefits besides the upside Bitcoin provides.
We did it. 10:03. Pretty good. So yeah, you guys can check that out. It is, let me just get the exact address so you guys have it. It is futurefund.archpublic.com, and of course, just archpublic.com. You can find all of those things. Great conversation. I'm going to go for a run. James made me feel like I need to go run. And otherwise, the final thing for those, you may have seen that Dennis Porter has been wildly teasing a massive announcement in the political realm of Bitcoin, which is today. Well, that is happening. He'll join later with whoever. I don't know what the announcement is, by the way, guys. Don't shoot the messenger. I know everybody freaks out. They're like, wasn't big enough. Giving the forum on Crypto Town Hall. Also going to do an interview with them later today. But if you're wondering what this is, I am as well, and it will be announced on Crypto Town Hall at some point during the show today from 10:15 to 11:15.
Probably,
I'm going to make Andrew at least join.
Yeah, I'll be on there. Maybe even a bigger announcement is Morgan Stanley just said that they're going to offer Bitcoin and crypto trading the first half of 2026. By the way, that's either going to happen, with an acquisition that they're going to make. I've been hearing about acquisition rumors at Morgan Stanley having to do with Bitcoin and crypto trading, exchange stuff. But they did just announce that they are going to, they're going to be offering, Bitcoin and crypto trading spot type stuff in 2026. Yeah.
Wow. There we go. All right. We will see you on the spaces. Thank you guys. See you soon. Bye. AI is reshaping the world, but right now it's stuck in the hands of just a few big players. But what if AI could run openly, verifiably, and on-chain? That's what Zero-G is building. The world's first decentralized AI operating system open to everyone. Imagine a network where you don't just trade tokens, you train, store, and run independent AI models at scale. No lock-ins, no black boxes, no single point of failure. Just quick, cost-effective, auditable AI that anyone can build. If you believe the future of AI should be a public good and not just another corporate monopoly, join us at zerog.ai. That's the number 0 and the letter G.ai.